Hello guys, welcome back to UCR Forest Academy. Once again, you are welcome back to the channel. In today's lesson, I'm going to be explaining to you guys every single thing you need to know about this very particular entry model I want to introduce to you guys. This very particular what entry model I want to introduce to you guys. So each are the type of trader who love using confirmation entry each time that price arrives to your higher time frame point of interest or lower time frame point of interest. You want to look out for one or two things before you go in for a buy or sell. This lesson will help you to understand that it's not only with change of character that you can actually look out for whenever price arrives to your zone. There's a particular entry model I want to show you guys on the chart, and I will show you guys where to go in for a buy or sell with that very particular what entry model. And I also show you guys where to place your stop loss and your take profit. I will not only end here, I will still show you guys the kind of candlesticks you need to look out for before you actually what before you make use of that very particular strategy, or before you look out for any buy or sell with that very particular what pattern. So all you have to do is to watch the lesson to the end. Believe me, you will surely understand. Have you ever marked change of character before? All of a sudden you are waiting for price to return back to your zone, something that look like this. Price printed a new high, price printed a new low. Now price has taken a new high, and you're waiting for price to return back like this so that you can go in for a buy. All of a sudden price just return back a little like this, and all of a sudden price returned back little like this and moved up massively to the upside. You ended up missing out on that very particular entry, and you have to wait for so long before the market will come back to your zone. This very particular lesson will tell you, or will help you to understand, there's a particular thing you have to look at very very early, even before change of character. All you have to do for me is to make sure you watch the lesson to the end, because I didn't just wake up one morning to start making a lesson like this. I actually went back to see how this thing had been playing in the past, and also make use of a particular strategy each time I want to trade on lower time frame. Like whenever I'm less busy, I want to catch one or two set off, or maybe if my zone is too big, I always make use of this particular strategy to know that the trend is about to remember, you can actually go back to backtest this particular strategy. It does not just mean that after I introduce this thing to you, the next thing on Monday, you're already pressing buy or sell with this particular strategy. No, I still encourage you to do your backtesting. Go back and backtest how far this thing has been playing out in the past. Okay. Also, I encourage you guys to like and subscribe to the YouTube channel. Make sure you turn on your notification button on. You guys know that I've been able to drop lots of lessons here on YouTube. It's now going to be 53 lessons I've dropped on this particular channel under 1 year. It is not even up to a year. We created a particular channel, and we have been able to drop up to 52 lessons. So if you have been struggling in one way or the other, I encourage you to come and check out some of the videos here. If not, one or two of these lessons can be of a massive helpful guide to you. Don't forget to like and subscribe and share the lessons. Leave your notification button on so that each time that I drop a quality lesson like this, YouTube will definitely notify you that I have dropped a lesson, so that you can come and watch. Okay, so that is what I'm pleading for you guys to do. Don't forget that our VIP class program is still running. All you have to do is to use the number you are seeing on the screen and reach out to us on WhatsApp. That's one of the best ways you can actually understand whatever we are actually teaching here, because you will be mentored privately, number one, and you're going to learn on your own pace. There is no time limit. It's not like after 1 month or 2 months we are done with you. We will keep on mentoring you until you understand how to trade the forex market, and that is for lifetime. Okay, so now let's really start the lesson right away. Make sure you use the number displaying on the screen and reach out to us on WhatsApp. Ask us maybe other questions you want to know about the academy. We will definitely want to explain to you. Okay, so now let's talk about entry model, or the particular entry model that I want to introduce to you guys. So we all know that whenever we do our analysis, we are subject to two things. Is either you place pending order, or you actually wait for price to return back to your zone. Then the next thing you look at for maybe change of character, or maybe some checkmate before you actually you execute that trade, right? You wait for change of character before. Let's say that you came to the chart, price is trending to the upside like this, and then you want to buy when price gets to this zone. This is the zone you want to buy. So when price gets here, you either jump into lower time frame to start looking for a reversal pattern, right? So when the moment you see a reversal pattern like this, a change of character like this, then you are now expecting price to return back before you can actually go in for a buy or sell, right? And at the end of the whole day, sometimes price return back, sometimes price doesn't return back. You get to see something that look like this. So this particular entry model I'm here to share to you guys is very similar with change of character. It is very similar with what? With change of character. The only difference there is just the pattern of entry. It's just the pattern of what? Entry. Do you know that this particular entry model, I still want to show to you guys on the chart, still shares the same definition, or it's still like, even if you want to define it, it still has the same as the way you define change of character. We know that change of character is a trend reversal, right? Is a trend what? Reversal. It is what that reverses an uptrend market from a downtrend, from a downtrend market to an uptrend market. Let's say price is like this, printing a new high, printing a new low, printing a new high, printing a new low, printing a new high, printing a new low, printing a new high. The moment that price does something that look like this, now price takes out a new high. So this time around, you have gotten what we call a trend reversal, like shift in market structure. You have gotten what we call what? A shift in market structure. Most of us that use change of character, we actually wait for price to return back like this before you can actually what? Execute that very particular trade. But this particular entry model I want to share to you guys is called failed swing highs and low. Failed what? Failed swing highs and low. Look at the name. The name is called failed swing high. You can call it, sorry, let me rewrite it again. Failed swing highs and low. Like, we do two things in the market. We can actually buy, or we can what? We can sell. So you either choose one. You choose one at a particular time. So it's called failed swing high, failed swing high, failed swing high, or low. So within a particular strategy, it is still this very particular stuff which we call failed swing high or low, which can be called SMS. Can be called what? SMS. It means a shift in market structure. It means what? A shift in market structure. Whenever you see me writing something that look like this, whenever you see me writing something that looks like this, all right. So this kind of thing now, you see me writing SMS. This means shift in market structure. Shift in what? In market structure. Understand the name. Shift in market structure. So it means that price has actually shifted from a downtrend market to an uptrend market. Just the same thing like a change of character. But one particular thing about this particular pattern of entry is that it formed very early before change of character. It forms what? Very early before change of character. If you are trading change of character, you will, before you can actually know that this downtrend market has moved from a downtrend market to an uptrend market, you have to wait for price to take out this high. That's number one thing. You have to wait for price to take out this particular what? External high. You need to wait for price to take out this very particular what? High. The moment that price takes out that high, that is now when you are going to be confident that the trend has reversed, and that is now when you start marking out this very particular zone, right? But somebody that actually makes use of this very particular strategy or this very particular entry model I'm about to share to you guys, the person doesn't need to wait for anything like change of character, because it forms very early before change of character. It forms what? Very early before change of character. And how does it form? Now, you all know you're going to wait for this, a break like this, and then you wait for price to return back and tap you in before you buy. But the person that makes use of this particular strategy I called failed swing highs and low, look at what the person is reading on the chart. Let's say that price is bullish like this. You see an uptrend market like this. You see a downtrend market. You see a retracement. The next thing, price trended to the upside. Price is bullish, right? Price is bullish. The time came, price came here, printed a new low. The next thing, we are expecting price to print a new high that is going to take out this particular what? External high. All of a sudden, price now came up like this, and now price started producing like a checkmate. You started seeing like series of small candles around this particular level. You started seeing small candles around this particular level. Now, when you start seeing those candles, you need to know that this particular high is now rejecting this very particular what move. It is now what rejecting this very particular move. So before you can actually go in for any sell within a particular stop, you need to wait for a bearish engulfing. You need to wait for candle reversal. Let me use that word. You need to wait for what? Candle reversal. It can be, you need to wait for bearish candle reversals. I mean, you need to wait for bearish candle reversals. It can be a hammer candle, it can be a bearish engulfing before you can actually what sell. Before you can actually what sell. So the moment you spot a bearish engulfing around a particular level, that is now when you will start selling. Your first take profit will target this low. You can actually do this thing on any time frame. You can do this on 1 hour time frame. You can do this thing on lower time frame like 15 minutes or 5 minutes. You can totally do it in any time frame. Okay. So why are you entering? Because you found out that since price came up, gave a checkmate. Price just gave a checkmate. Like you started seeing small candles, or maybe you see that price is consolidating around that zone, and then the next thing, just wait for a hammer candle. If you see a hammer, if you see an inverted hammer candle, that will signal a strong reason to you that price wants to drop to the downside. Remember, you don't just look out for these things at areas of at common areas. You look out for these things at a key levels. At what? At a key levels, which I will still show to you guys very soon. So the moment you have seen this kind of thing, you see a bearish engulfing, that is now when you start selling down to the particular what POI. This POI can be your face take profit level. This POI can be your face take profit level. Then your stop loss need to be above. So this is what we call what? A fail swing high. We call this thing what? A fail swing high. I'm going to show you guys the person that I'm going to show you guys where this thing worked many times on the chart. And when you are using this strategy, you need to be very, very focused. You don't just look out for it at common levels. I will show you the levels you need to be looking at for these things. Now, the person that uses change of character will wait for price to take out this particular low. He will have to wait for price to take out this low. But you that have already getting very, very early with that very particular failed swing high or low, you have capitalized on all these sells. You have what? Capitalized on all these sells. Now, the next thing now to do that, the moment you have seen that this low has been taken, now even your confidence will increase. Even your what? Your confidence is going to what? Increase. That is now when, if price retrace like this, those guys that use change of character will now get in, and then price will start dropping to the downside. But just know that you are already on the trade very, very early before them. You are what? On the trade very, very early before them. So let's say that price keep on dropping to the downside like this, keep printing a series of highs, a series of lows, series of highs, and on this time around, pay very attention of how this thing keep forming. When it's now on a downtrend market, see how it's going to form. The moment price prints a new high, we are expecting a new low. We are expecting what? A new low that is going to take out the very previous low. We are expecting what? A new low that is expected to take out the very particular what? Previous low. Then the moment that price came and was unable to take out this low, and was what? Unable to take out this low. Now, all you have to do is look out for bullish reversal candles. Look out for what? Bullish reversal candles around this zone. And the moment you see something like a hammer candle backed with a confirmation candle like a bullish engulfing, now that is now when you're going to enter on a buy and target to the upside. And what? And target to the upside. Now, within a particular way, you have already getting very, very early before what? Before those guys that use change of character. You know, something about change of character is that it's not like change of character doesn't work, but sometimes price might not give you that retracement you are looking at. That is why I recommend before you use this thing, you have to look for the particular stuff in these levels. Look at the levels you are expected to look at for the very particular stuff. So these are like the key areas where you are expected to look at for this very particular what entry. So it is going to be like a POI, like at area, like the place you mark out, maybe your higher time frame POI or lower time frame POI. Also, a fair value gap. For those of you that love trading with fair value gap, I'm going to show you when price get to a 50% encroachment level of that fair value gap, which I have is an example on the chart where I'm going to show you guys. When price arrives to the 50% of that fair value gap, that is now when you are not going to make use of the particular what strategy, because there is a psychological level. Now, another place is what is 61% Fibonacci retracement tool and the 78%. These are the levels where you have to start looking out for this particular what failed swing high or low. Remember, when this thing is in an uptrend market, it is going to form like this. It's going to what form like this. The moment price print a new high, now the price now print a new low that was unable to take out this previous low. What you have to do is to look out for change of character, is look out for bullish engulfing, or maybe a hammer candle back to any bullish candle, the next thing you go in for a buy around this zone and target to the upside. Those guys that use change of character must wait for price to break a high. But this time around, you are getting in very, very early before them. Okay. Another thing again, look at how it forms on a downtrend market as well, which I told you guys. On a downtrend market, the high will not be able to take out the previous high. The high will not be what? Be able to take out the previous high. Now, let me show you the candles for you to look out for before we will now proceed to the charts. All right, now when you look at the candles, look at the candles here. See, I'm taking my time to explain all this thing because it's very, very necessary. Now you can see a series of red candles, like bearish candles. These are the things you need to look out for. Whether it is a bearish candle that formed at that very particular level, whether price did, let's say that we have a high like this. Let's say this was the high we had, and this was that very particular low. And then this is now a new high. Let's say that this was the main high. This was the main low that price formed. And after price printed a new high, price now printed a new low that was unable to take out this previous low. The moment you see this candle, you have to wait for maybe a bullish engulfing. If that candle is a red candle, calm down. Wait for what? A bullish engulfing. Wait for what? A bullish. The moment you see that bullish engulfing like this, now you have to what? Go in for a buy immediately after that bullish engulfing. Your stop loss need to be what? Below this zone. Your stop loss what? Need to be below this zone, and then you have to target to the what? To the upside like this. You need to target to the upside, something that look like this. Okay. So in the case of a downtrend market like this, let's say that price printed a new high like this, and now price printed a new low. Price printed a new low like this. Let's say these candles are not really complete, like the bearish engulfing. I want to say, let's say price printed a new high, and then price came up a little. Okay, and let me try to correct it now. So this is supposed to be a green candle here. So please, guys, just follow the procedure. Follow the procedure. You will be able to, okay, this is supposed to be a red candle. You'll be able to make use of this particular strategy very well. So let's say it sold a little like this. The next thing we had a push again to the upside. The next thing we had a candle like this. So let's say this candle actually have a long wick. We don't care to know any wick it has, something that look like this. This is a sell candle, this is a sell candle, or let's call it a green candle. So the moment you see this kind of thing now, this is now when price printed a new high, price printed a new low. That low that price printed was unable to take out this previous low. Now the price now went on and printed a new high. That high that price printed was unable to take out the particular previous high. This is now when you are going to sell upon looking out for what? For bearish engulfing. Upon looking out for what? For bearish engulfing, you now start what? Selling. Those guys that use change of character will wait for price to take out this particular low. Before now, they will wait for a retracement and start shorting price to the downside. You just need to understand the difference between this thing and change of character is too much. Change of character need to take out a low. You wait for a retracement. But this one does not need to take out any low. In fact, you should be able to use your trend line and mark something that look like this. And mark what? Something that look like this. If this thing does not look this way, if the particular trend line I mark does not look this way, look at it. It has to look like this. It has to look like this, the same way like this. If it doesn't look like this, that means you did not get it correct. If it is looking like equal high, please, I advise you not to make use of it. It must be a failed swing high like this. That high or that low should not be able to take out the previous high, or should not be able to take out the previous low, depending on the trend of the market. So we have spent 18 minutes trying to explain all these things. Let's quickly go to the chart and see where all these things formed. So this is Euro USD on a 15 minutes time frame. You can do this thing on any time frame of your choice. Now we can see we had a strong BOS here. We have a point of interest around this zone actually. So you can see we have this BOS. So let's say you wanted to trade the reversal. And then look at what happened. The moment this BOS formed, price printed a new high. Look at that high that price printed. Price printed a new high like this. Look at the high, and now price printed a new low. So from here, we can see we have some checkmates. We can see we have what? Checkmates, series of consolidation candles. These candles here, no one is bigger than each other. They are just consolidating around this zone. You can see the candles. So you don't really have to execute immediately. All you have to do is to wait for bullish engulfing. Is to wait for what? Bullish engulfing, which you can see this candle came and engulfed all this range. It came and what? And engulfed all this range. this thing is too much. Let me reduce the color. So it came and engulfed all this range. You can see that candle, it came and engulfed all this range. The next thing now you have to do is now go in for a buy immediately like this candle form, like this. Your stop loss has to be what? Below the low, and then you have to target maybe 1:2 or 1:3. You can see this one is more than 1:2. This one is more than 1:2. You can actually target maybe this very particular POY like this. So you can see we had a clean 1:2 that actually returned around a particular what zone. It is even more than 1:2. This is not, it's up to 1:3. Now let me remove this thing and show you guys what really happened here. Let's say you are the one that love using change of character. You love using what? Change of character. Now the moment that price breaks like this, you are now going to be marking out this candle and you'll be waiting for price to return back. Now price did not return back. It's a price what went up. So you have to make use of that very particular what strategy to go to get in very early, to what? To get in very early. So you have to be making use of that very particular what strategy. You can see as price was buying, but when we spotted a POY around this particular zone, this very particular POY, first of all, there was a massive BOS, and then we know that price is going to retrace. That's number one thing. We know that what? That price is going to retrace. The next thing, price printed a new high, a new low. Now this new low printed this high, and as you can see, we are having consolidation of candles here. We are having what? Consolidation of candles here. The next thing, we had another candle that spiked up. We don't have any business with what is really happening here. Our own is to wait for a bearish engulfing. Is to wait for what? For a bearish engulfing before we can react. Now as you can see, the next thing, after this green candle form, we thought that price is going up, but this high was unable to take out this very particular what high. This is what we call what? A failed swing high. The next thing, look at the bearish engulfing. The next thing, after the bearish engulfing, place your sell immediately. Place your sell immediately. Put your stop loss above, and then target what? Maybe to that very particular POY you want to react from again. So you can see there was more than 1:2 here. This is up to 1:3. The next thing again, we can see when price tap into the very particular zone. The moment that price tap into this zone, that is why you need to know that every strategy will not guarantee you 100% winning rate, but it's always going to guarantee you like 60 to 80% winning rate if you execute it rightly. Okay, if you follow this instruction I'm giving you rightly, believe me, you are going to make consistent profit. But if you are impatient, you want to take action immediately that price return there, you are not looking out for all these things, you are going to struggle. That is why I still encourage you, use the number you are seeing on the screen, reach us to us on WhatsApp, be part of our VIP class program. These things you are going to be able to master it, because you are going to spend quality time making sure that you do understand this thing. Not everybody loves making use of a confirmation, not make using of a pending order. So if you love using this particular strategy, you can make out something from the market. So as you can see, we had price tap into the zone. Yeah, this was when price tapping like this. This is when price tapping. The next thing, price printed a new high. You see that high price printed was unable to take out this low. Since we already have that mindset to buy. Now I forgot to tell you guys this thing. When you are using this strategy, you have to be looking at one side of the market. You have to strongly be looking at one side of the market. Even if you want to take a counter trend, you will take that counter trend with a strong reason. You are either taking that counter trend because price break a major level, and then you already know that this thing is going to retrace. Now wait for it to form before you what? Before you execute it. Are you getting me now? Now, the part I said you should be looking at one side of the market is that if you discover that the trend is bearish, my friend, focus more on selling. Focus more on what? On selling. Wait for price to return back to your POY before you what? Before you take the action. Not when you see that something is massively bearish and you are looking for a way to assist it to go up. You might struggle. But even if you want to assist it to go up, you need to make sure you see a BOS like what we saw here. Like what we saw around this zone. We spotted a BOS, then we waited patiently for this thing to form. Immediately it formed, he gave us a bearish engulfing, we reacted to the downside. First of all, you want to take a counter trend, a BOS. The next thing after the BOS, you need to see a new high that was unable to take out the previous high that broke that structure. The third thing to do is to look for a bearish candle. Is to look for what? For a bearish candle. After seeing that bearish candle, you take an action. So that is it. So now you can see when price tap into that zone, When price tapped into that zone, price printed a new high that was unable to take out the particular what high. But because we already have that mindset that we want to keep buying, now the moment that price gave us a retracement like this, look at that retracement. Price gave us the particular retracement here. Let me remove this so you can see it better. So when price came up like this, price retraced, gave us a retracement. Now look at that retracement is like a hammer candle back to the what with a bullish candle. Now you are now going to enter on a buy. Stop loss what below this low, and then you have to target what maybe 1:3 or 1:2 of it. So this time around you we are unable to make something out of this. Instead, price came and smashed your stop loss. So you can see this thing is like the first time that price is hitting our stop loss within a particular what strategy. Then you can see what price did. That price came back to respect those guys that normally make use of change of character pattern of entry. Even with people that use change of character, as you can see, price came even dipping, wicked all of them out and still started buying. So normally what happened, since we still wanted to buy, the BOS below is not valid because as you can see, this BOS just happened with a wick, so it's not valid. So that means that this POI is still what is still valid, just that price just wanted to collect what liquidity. Now we have a new high here, we have a new low. The next thing, we have a new high. We now have a new low. This one may not look very clean. This one may not look very clean, but let me show you guys more places it happened so that we can see this thing did not happen anywhere around here. It didn't happen anywhere around there. Remember, you have to spot it at key levels. You have to spot it at what? At key levels, at area of interest. This is a point of interest I marked. These are not mitigated points of interest that has a fair value gap. This is a what? A non-mitigated what? Point of interest that has a what? A fair value gap and was able to break a structure well. Now, the first thing we saw here is that when price was coming back, see, you marked this particular low as a change of character. The retracement could not get up to that low. As you can see, it could not get up to that particular what high. You missed out on this trade. Now, see when price tapping. Now, the moment that price tapped in, price printed a new high. Now, price printed a new low. That low that price printed, I have to wait for what? For a massive bullish engulfing. After that bullish engulfing form like this, you enter here. Stop loss have to be what? Below, or you can keep it somewhere around there. Then this time around, you can see price tag us out before still going in our direction. So you can see we lost the particular was setup. We lost the particular one. This is like the second time we are losing, right? This is the second time we have won twice with this thing, and we have what lost now twice. It's normally what happened. Okay, now you can see I'm showing you guys both the winning part and the losing what part. So now let's look at another place that market reverse. So we have been seeing all this massive sell to the downside. Next thing, we had the full retracement. That price came back to mitigate this range created point of interest here. Now, even if we are doubting this zone, the first thing that we want to do, that we want to see a confirmation around that zone. See when price tap into that zone. Moment that price tap into that zone, we started waiting for what? What kind of swing something should you be looking at for here? You're supposed to be looking at for what? For failed swing high. For what? For failed swing high. So as you can see, when price printed a new high, price printed a new low, because you want to sell. Because you want to sell. That is why you are looking out for way to sell. Now we have a new high. We have a new low. We have a new high that was unable to take out this particular what? Previous high. And even this thing gave you more information. Now you can see we have in the decision candles. We have checkmate. We have checkmate. The next thing we have the particular what? Hammer candle that formed here. This hammer candle even took out all the lows of the previous candle. This is now when you're supposed to go in for a sell like this. Sell, stop loss above here like this, and then you target to the downside. So let's see whether you are able to make even more than 1:3. So as you can see, every strategy has its own winning rate and also have its own losing rate. So after 2 losses in a row, you came back to winning ways and you made something more than 1:3. Or this is up to 1:4. I can see 22 pips, and 86. This is 1:4. You were able to make 1:4 here. For those that understand risk management, they knows what I'm saying. That is why I still encourage you to what? To join the academy. This is now when change of character played out very well. You can see change of character. Look at how change of character formed. But if you are using the particular failed swinger and low, it did not happen. It did not happen here. We have a high, we have a low, and then this thing is not what I meant. This is not what what I meant. As you can see, price went up immediately and broke a structure. So this is now a pure change of character. Retracement, we get in for a buy and price today pushing to the upside. So look at what I mean by fell swing high. After this BOS that happened here, after price return back to this point of interest, you can see we have a point of interest around this zone. This is the point of interest we have here. So before we executed the markets around this zone, we waited for something. Now look at it here. This is a high, this is a low. This low was now unable to take out this previous low. We don't have any business with it. Now the high that price printed was unable to take out what? The previous high. Now patiently wait for a bearish candle. Patiently wait for what? For a bearish candle. So even if this candle was unable to help you to understand that this thing is about to sell, I believe this one will be enough. And you can see after that price sold massively. Although price still later came back to give change of character guys and entry. You can see, so but with this, we are already on the trade very, very what early. And as you can see, some profits later on, price tag us out, coming back to mitigate that POI very, very well. The next thing again, we spotted what happened again. Price printed a new high, printed a new low, printed a new high. There's now like a consolidation. When price attempted to go up, look at it. Price attempted to go up. It was unable to take out the particular what previous high. That is now when you start looking out for what? For bearish reversal candles, which you can see we had a hammer candle here. The next thing you started was selling, and this is how you made a massive profit. Look at all the profit. As the one thing about this particular strategy is that you are going to be getting in very, very early before change of character. Now, this is happened to be a zone you'll be taking if you are using change of character, because you're going to wait for this low to be taken, and then you have to wait for a full retracement. And as you can see, you have to wait for it. But with those guys, they are already very, very in, very, very early. Are you getting me now? With this thing in place, look at that new high. Look at the first high. Look at the second high. The second high was unable to take out the previous one high. So that is what I mean by what? Failed swing high. Look at where change of character happened very well. We have a new, look at an SMS again. Look at an SMS. We had the POI here. We had a point of interest around this zone. Price came, smashed the point of interest, printed a new high, printed a new low. Now the next thing, look for your candle formation. We have a hammer candle back to the bullish what? Bullish engulfing. Go in for a buy, target the upside. And as you see, price boards. Next thing, those guys that mark change of character, price came so close, could not mitigate, pushed up massively. You have already made what? Money. So just remember, first of all, you have to see if it's a downtrend market, you need to see a low, you need to see a retracement of that low that was unable to take out the previous low. That was what? Unable to take out the previous low. And don't forget, you must make sure that the trend line you are drawing looks like this. Looks like what? Like this. Are you getting me now? So you can only draw this trend line after the first candle form. Now you wait for a confirmation candle. You wait for what? For a confirmation candle. Don't forget, you are looking out for these things at key levels. Now, price has tested this POI. You are scared. You don't know whether price will respect it. Now, look out for it. Now, you have a high. Like this, you have a low. Now, you have a new high. The next thing, you target to start selling. Now, after this very particular high, let me remove this thing so you can see it very clear. After this indecision candle, we had this bearish engulfing. You now started was selling. And as you can see, price moved in your favor massively. You can see how this thing is working. So I still encourage you guys to go back and back test this thing. Go back and back test it. Now, just imagine you are doubting these two zones. You are like, we have a POI here. Even this POI, even cleared liquidity. We have this POI, we have this POI. You don't know the one that is going to hold. But since you love using confirmation entry, see what happened. Price tap into that POI, gave you a new high, gave you a new low, gave you a massive bullish engulfing. That is now when you have to go in for a buy. When price printed to the upside, retrace again, you made all this profit even before price came back to take you out. So believe me, you must have been using break even around this zone. Go back and back test this thing. Go back and backtest this thing. The origin of this thing came from double top and double bottom. It came from what? From double top and double bottom. So you know that this double top and double bottom will not give you an exact equal highs or equal low. That's number one thing. Are you getting me now? So that is why you have to capitalize on it, especially when you are looking out for the entry on a point of interest that you are doubting. look out for this. You can see a new high, a new low that was unable to take out this very particular what previous low. So this is already like 34 minutes of my time. Please, I encourage you to go back test this thing, back test it, go back, look at what has happened in the past. He played out here very, very well. That does not mean that you cannot lose, but the winning rate cannot be compared to the losing rate. I myself is telling you this thing. Go back and back test it. Now, see, you are doubting this zone. You are doubting, maybe you mark this zone. You are waiting for confirmation entry. When price tapping, did he give you that thing? He did not give you. He did not give you anything like that here. So you don't have to execute. Leave it. Now price smash the zone left. You did not lose anything. You did not want, you did not lose anything. So your own is that you are looking out for it at key levels. Okay, so please, guys, I hope this lesson was enough to help you guys understand something about failed swing high or failed swing low. We call it SMS. First thing to look out for is a low that was unable to take out the previous low if the market is in a downtrend market. You get, after you have seen that low that was unable to take out the previous low, it must not be equal. It must not be what equal. And here it's going to be slightly lesser than the previous what low. Okay, so now the next thing now to look out for is bullish engulfing because you want to buy. But if it's if it's an uptrend market, you have to see a high like this, a low, then that low that price is going to print a new high that will not be able to take out the previous high. After you must have seen that bearish engulfing, you start selling immediately. Okay, please, guys, share the lesson. I'm begging you guys, share the lesson so that your friends out there can actually what benefit. Okay, for now we are going to end the lesson, and I believe that this lesson was very impactful, right? So thank you, and may God bless you.